I've got too many slides as usual, so I'm going to go through them quite quickly, but they will be available in the near future on the Industry Forum website. And I want to start off talking about two different costs of controlling the pandemic. There's the public spending cost, which is the one everybody focuses on, but there's also issues about lost output, not only during the management of the crisis, but also what's happening to longer term productive potential in the economy. So I think it's quite obvious if you close the economy down and compensate people for not working, the public spending costs are going to be pretty big and the loss of output is going to be pretty big as well. So the real issue, which I'll be talking a bit more about, is actually, well, what's this mean though for the future? I'm sure we've all got our own views on what's gone wrong with the government strategy, and we've heard some already. My own view is that it tried to somehow finesse a trade-off between opening up the economy and the virus, which basically is a trade-off which just doesn't exist. And of course, unfortunately, we have the very high death toll, and we have one of the biggest falls in GDP, which maybe could have been less if the control of the epidemic had been better done. But as I say, I wanted to really talk more about how has the government done in maintaining the economy, if you like. So in terms of unemployment, okay, it's not great to have any rise in unemployment, but the sort of worries people had a year ago about widespread redundancy and so forth haven't actually materialized. And if the OBR's got it right, you know, unemployment should peak fairly soon after another shakeout and then decline, although albeit slowly. That's got a lot to do with the furlough, obviously. So the peak, a third of the workforce was on furlough. This second big furlough, we're not anywhere near that, we're half. But it is obviously this which is actually sort of keeping things going. And I agree that there's issues about quite how it's been done, but I think it's one of the more successful of the policies they've had. One of the other lot they didn't reach self-employed, so the number of people, the proportion of self-employed right at the bottom of the self-employment earnings has gone up quite sharply from about a third to over half. So although the overall numbers you might say don't look too bad, there's clearly stresses in parts of the economy, and also quite interesting distributional effects of all this. So higher earners get more wealth, get wealthier as they save more, and the lower earners having to dip more and more into savings. The savings ratio, first, certainly there's more savings in the economy overall. And I suppose the interesting question looking forward is how much of this is spent. I think it's still very much an open question. There's only so many haircuts you can have to catch up, and only so many meals out you can have extra. But clearly some of it will be spent. I think we just don't know quite how much that's going to contribute to recovery. And turning to the business sectors, it's quite interesting. Apart from furlough, I mean, the main support for business is subsidised for the various loan schemes and so forth. And it's quite interesting. The black line shows that large businesses were actually pretty quick to borrow more, probably for precautionary measures. We know obviously some big businesses are in real trouble. Others have done pretty well, not only out of the furlough, but also because their businesses have continued doing very well. But in marked contrast, on average, SMEs are borrowing a lot more consistently than they were before. So again, as we'll see, strains are not showing in the surface, but there's still difficulties. And these are just the industrial sectors which have seen their cash reserves declining and are below average. And so it's things like hospitality, personal services, and those things, again, showing there are stresses beneath the surface still developing. But again, if you go and look at the big picture again, I mean, again, you haven't seen the waves of insolvencies, either personal or corporate, which again, people were expecting to have. I mean, it's still an open question how much of a shakeout we get. But, you know, so far, again, I think the government's done reasonably well in keeping the sort of capacity of the economy still, largely speaking, intact on those measures. Clearly, it's expensive. 350 billion the government reckons it's spent, plus various other bits it likes to try and add in. That's gone straight through into public sector borrowing, because it's all borrowed. I would point out, I'll put up a long-term chart of this, just to point out that it's very unusual for the government to actually be in surplus. You know, for the last 100 years, the government is more often borrowing, and the times when it's paying any money down are very few and far between, and it's not actually paying much off. So it's not, you know, it's not automatic that somehow it has to stop borrowing. It's never happened really before. And net debt to GDP ratio going up, well, it would, wouldn't it? And I think, you know, tend to agree with the OBR. Well, on their numbers, they are pretty close to peak. I'm not sure that their actually plans are going to be sufficient, but nevertheless, this is just an inevitable price we pay for surviving, really. And as Bridget mentioned, you know, basically interest rates have fallen faster than the debt's gone up. So the debt burden is probably the lowest it's been for a very, very long time in terms of debt service. So I mean, I find it very odd that people want to focus on this as being a problem. All sorts of things could be a problem in the future, but there you are. Just going back to where I started and saying, what about the longer term? Has the government managed to preserve the capacity in the economy to pick up again? This is the OBR's projections, and the blue line in the middle is their sort of central view of where we are. And it's suggesting that we've lost 3% of capacity in the economy permanently. So although we can go back to the old growth rate, perhaps we can never get back to what was the old growth path. We're always going to be worse off. And by the way, the OBR is also suggesting that Brexit will be another 4% off. So we don't really want to be losing capacity unnecessarily. My view of all these calculations are it's very, very sort of flaky stuff to try and work out even where you are compared to output, leave alone how much you might have lost. And the OBR is guessing that we missed out on 2 years business investment, or partly 2 years business investment, and there's maybe some labour market effects to throw in. The view I take of all these and the output gap type calculations people make is that the great danger is that policymakers start to act as if this is actually definitely true, and you end up with self-fulfilling policy measures which make sure that you don't actually ever try and test whether you've got the capacity there or not. So I wouldn't take this myself too seriously. What happens now? Well, I think one way to reframe the public borrowing is to actually look at it as an investment. I mean, if we hadn't done this, we wouldn't have much of an economy left to grow. So it's an investment which you don't actually need to pay off investments all in one go in a hurry. There's also issues about what I mean, certainly the budget does not seem to be making much provision. There's some provision for what happens. But Sunak is again assuming that the economy is all over by the summer, which is what he's assumed last year. And of course, it turned out not to be. But even if the best case and somehow the pandemic stops being an issue, there's all sorts of other questions particularly about what shape is the post-COVID economy going to be, and what a business is going to have to do to adapt and change to those measures. And I think there is an issue about more support. I mean, for example, if you take airlines, you might take the view, certainly they can't go back to full business just because it just happens that the UK manages to make itself pretty safe place to be. That's not going to necessarily help them, but you don't want them to disappear completely. And one thing you might want to do, which actually everybody wins on, is actually start talking about wage subsidising for a sector which is in that sort of difficulty. We'll have to see. So what I'm really saying here is, before we even start worrying about paying for the pandemic, we probably want to support the recovery plan to make sure we don't actually sit back and lose all the gains, if you like, we've made so far in terms of making sure things stay intact. And the one thing I would say about the debt and paying back the debt is, if you government seriously wants to get the debt to GDP ratio down, the best way to do it is to grow GDP. And you saw we had 10 years of austerity, which was basically self-defeating. Debt still went up and the economy was very weak. So we don't want to do that again.